How you, Daniel? How are you, buddy? Welcome back to
Good, Dale.
Face.
Thanks for
Yeah,
having me today. How's everybody doing?
it's good. Good to have you, Daniel. So, what's got your attention? So many things,
Oh,
huh?
yeah, been kind of been monitoring over the last couple months this unwinding, if you will, of the big inflation trade that we saw for the last, year and a half really play out in the
Yeah.
commodity markets. And for those that don't know me, I'm Dan Hussey from Zaner FS. We're a boutique brokerage firm. I help my clients manage, commodity futures risk and, futures trading. And one of the big things in our mainstay of clients are in the energy, metals, and agricultural sectors. In the last couple of years, we've seen these big run-ups in all of those, markets.
Before
With
we get going, Dan, is that your graduation picture?
no, that's not my graduation picture. I'm not that young, but
All
thank
right.
you.
Okay. Anyway, I was wondering.
Yeah, no, it's a good. We had some headshots made up. I have another one that we did too
All right.
to help with our
Anyway,
social media presence.
yeah, you're probably going to get discovered on Face, and someone in Hollywood will offer you a contract so that you can supplement your trading account.
That would
Um,
always looking
all
for
right.
another
So
hustle.
are you referring to, like, the action in precious metals on Sunday? We basically went parabolic in gold and silver and then put in these key reversals.
Yeah, and that move and break above that, kind of triple top that we had building on the gold chart. This is a gold futures chart, continuous
Yeah.
contract I've got up. That triple top there into that 2080 area that finally,
Yeah.
thought that was the big move. And boy, what a head fake that has proven to be. Interestingly enough, right, we're coming down into channel support. And a little, second in a series. So if we did two steps forward, halfway back here into 1935, we kind of did two steps forward, gapped up, and have now walked back, 50% into attempted a gap fill, trendline support, and maybe that 50% back from, the lows of November there through the highs of December, that spike high. I'm not saying that gold is an outright buy right here, but an interesting place technically to be defending on the chart on that
Yeah.
pullback to test what was old resistance and a gap fill open, now a support. If gold wants to establish itself above 2050 but below 2150 right now, I think gold has been honestly kind of one of the later movers here. We saw, in terms of the inflation trade I was talking about over the last couple of years, we saw other markets really rocking and rolling more so than gold and silver. And it's been very interesting to see how well gold and silver have actually held up in this period of financial tightening, right? Where we've had the Fed raise
Yeah.
interest rates, as fast as they did, in ever, certainly in my lifetime, and certainly we got to go back into the early 80s for a period where they're maybe just as aggressive or something that caliber. Anyway, point is right, all of that was done to try to quell some of these runaway moves in markets. And it's interesting that gold is just, in my opinion, starting to break out of some of the levels that we've been kind of waiting and anticipating for 2 years of this inflation talk and discussion, right? Gold's always been historically that hedge against inflation that the market uses, because it's not denominated in any one single currency, right? And can't be debased in theory. But nevertheless, gold kind of trying to make it for a breakout there. At the same time, kind of flip gears here and look at the dollar index, because I know we were just talking, you guys were just talking the
Yeah.
euro currency there. Um, a
Still
little fight in the
bearish?
trend.
Yeah.
You know, yeah, it's yes and no, right? I think this last year we were in a bear trend, right, into third quarter of 2023 there, and then something shifted, right? The Fed, um, well, something shifted in July, right? That we saw a pretty one-sided trade in the dollar and some short covering
And
right back up
yields.
into,
Yeah.
yeah, yields certainly rallied and have now
Yeah.
since then started to break apart. But that market has now traded, the dollar index has now traded up into that 50%, you know, off of its high from the
Yeah.
114 and change highs down to that low in September or July, excuse me. That 107 area was a 50% retracement. Well, the market has also pulled back, to be fair to the bulls,
To
into a 50%
61.8.
retracement.
Yeah.
Exactly, into the similar type of supportive area to that resistance that we talked
So do
about.
you have to have a bias to take a trade here now, since you have both of that? evidence of why it should decline and knowing why it held. Is this a rally to sell? I know some people were calling this a little ABC to 104.20, and we're
Sure.
we're going to be on our way to take out the 102.40 low or the 61.8 level that we held.
Yeah, and I point out that chart of gold and dollar index right now because while they're at very different points in their maybe daily and monthly charts, I think intraday over the last couple of weeks, they're starting to move a lot more in depth and
Yeah.
in step here. So watching the dollar roll over from this blue line, which is the 100-day moving average, it's almost 50 back from the highs at 107 down to the lows there that we had recently too. So you got 55 in 100-day moving averages that we're running up into. We're just testing above the 18-day moving average, which is usually a very short-lived thing. If we're establishing a new downtrend, this red line, we'd expect us to get right back below. Just like, hey, when we came back above it for the first time here in July, yeah, we flirted with it a couple times at momentarily wherever below until we finally rolled back below it. It's a good daily trend indicator that I like to use. And we're all still really just flirting and trading around the 200-day, which tells me that, hey, over the last 200 days, there hasn't been a trend on the dollar, which is pretty clear when you look at the 107 to 100 range that we've generally been in. And so it does, I think, take a bias to really take a trade here
Yeah.
because technically speaking, you have two sides that are at
Yeah.
play and both sides that are in a wrestling match. I
What's your
personally have a bit of a
bias, Daniel?
I
What's
have a
your
bias, a
bias?
little bit of a downside for the dollar here, and for maybe, that support and the gold that we just looked at holding as well. I'm
Yeah.
watching for both of those things here. Stay below this 104.20 high and stay
Right.
above that 2020, let's call it low from 2 days ago in gold. Both those levels holding, I think, could mean, a short-term weakness in the dollar and strength in gold. Go in lockstep for a little bit here.
How about the US dollar yen falling apart?
Yeah, probably a reversal that has been a long time in the coming. Um, get that chart up here for us. And when I say a long time coming, I mean the dollar yen for the last 10 years has been in some swings that have all been in a long time coming. If you go back 20, 30 years, right, we're unwinding a one-sided trade in the dollar yen that, for those that don't know, began back in the 70s through about 2012 when the yen was depegged. It pretty much traded from $350 to yen to the dollar down to about 70 something. Um, and a daily chart's just fine here for what we want to look at. There we go. So coming up for a second test there of
Yeah.
multi-decade highs here at 150, 195, and getting rejected, but still very much being inside of just generally speaking, I think a channel higher here in the very near term. Well, no, actually today is the day, I guess
Yeah.
we're breaking
Broke
that
it.
channel support, aren't we?
Mhm.
So the technical drivers of what kept the market up, going up, the trend lines, the channels have broken. Full 50 back from the low of 127 up to 151 will be an interesting level, but my concern with the 140 level and really anything between 151 and 127 at this point is that the market has proven three times now, once in a rally up to that high, another time in that first pullback, and the third time now all the way back up, that it can transverse this range with pretty easily over the course of 6 to 7 months. So I'm not saying we could trade all the way back down to 127 to 125, but boy, if I take a step out to that daily time frame, anyone that's a fan of Elliott Wave might see this as a flat chart with an A, B, and now a C leg down in the works, which 140 will be interesting to see if support and things happen in that kind of technical area. But I don't know. I don't know if I could. It'd be tough for me to be a buyer here in the dollar yen until we've established some kind of reversal off the low end of the 125 to 130 area of the range that we've been in.
Okay. Um, any bottom in sight for WTI, Dan?
Ooh, you know, we've been really watching and monitoring the what the government has been telling us about when they're going to be refilling that SPR. 65 to 70 was a level that has been widely talked about and narrated that, hey, there could be some support from the government, right? Actual
Yeah. Pump.
government intervention trying to refill that strategic oil reserve. I like to point out that crude has been in, a fight between two really big levels right now. Similar to that dollar index chart that we looked at, big 50% from basically 2020 COVID, March of 2020 lows to the highs after. 50% around 68 has held. That was also a cluster of old highs and support, an influential or an area of confluence that had a lot of highs and lows and fight over the trend in 2021. We came back down to test that area now as support, wanting to make sure we stay above it. Been a pretty choppy move to the downside all around in crude. Something that has caught my eye though is that 50% from the highs to low here at around 97 almost traded, almost got there. That was also the lows there from that initial pullback off the highs that we broke below back in early 2023, that we came back up to test, broken support now as resistance, right? So it's, we fell off from an area that was like technically speaking could be a continuation level. Also, maybe that trend line off the highs, right? The original one. So crude rolling over from where it did wasn't entirely surprising to me. What was surprising to me on this first pullback was actually we didn't hold any support around this cluster of highs. I mean, it was multiple months of highs around this 82 area, which is almost a 50% retracement, right? From the lows to the highs around 80. That 80 to 82 area, I really thought was going to hold on the pullback. It gave way. We're now holding below it in this trend channel lower. I mean, it's hard to call crude anything but a trend down until it's not. That doesn't mean that I'm not cautiously optimistic and thinking, hey, the bigger supportive area somewhere in the 68 area is obviously proven itself in the past here, into the end of 2023 here, or sorry, through the middle of 2023 and into the end of 22. But support needs to prove itself before I can really get excited and get long. Now, I'm obviously looking dollar short in the Dixie, maybe gold long. So it would make sense that if crude wants to bottom around here, and I see signs of reversal, that I would maybe think about getting long. But at least intraday with the lower lows and lower highs we've had over the last week, and hey, this is the 1, 2, 3, 4, 5. This would be the 6th day lower if we continue lower. You got to respect that and kind of wait for that reversal setup intraday to really get behind it. But I think we're down into the area that if you see signs of a reversal happening, I can make a good case for how and why support could be at this area. I just can't step and catch a falling knife, right?
Okay. Can you catch a falling knife and that a bottoming formation is completing in the grains?
Well, there's at least a market where I have a much bigger grasp of the fundamentals and the story narratives and the stories going on, right?
Tell us.
So coming out of the U.S. production season, and for those that may not be aware, right, grain is really only produced in fields around the world, but once a year, right? With the exception of double cropping in South America, so corn and soybeans really have one major harvest every year in the fall. And South America has obviously their opposite harvest, but two major harvests around the world, both of which feed Chinese and Asian demand for soy effectively, and corn and meal too. But point being is that most of this production goes and finds its way into China in some capacity, right? So we have a narrative of coming out of a lower production year for soybeans in the United States. We have very tight carry out. In other words, the stockpile of beans that we have left over after we use everything is going to be pretty small, relatively speaking. The relative pile of corn is much bigger. So we have this supply and demand element in corn and beans that are completely opposite sides of the spectrum. Both still have strong demand, but the supply of corn fills that demand where the supply of beans could theoretically run out. That demand can be, if the demand walks back because of higher prices, that can change. But obviously, we have not seen, like you pointed out, here over the last couple weeks and months, a big bull market in row crops. In fact, every attempt we've had for charts like the let's look at just the soybeans for a second. Jan beans have been in this range from $12.70 to $14 for over a year now. And that range that we're in will probably continue until we find that seasonal bottom, which in theory, and if we take a look at those real quick, see if I have them ready. I think I had them somewhere here. seasonal soybean chart. Here we go. So this is soybeans over the last 5-6 years plotted out. The average one, which is this neon color, is the one that we're really interested in here. And if corn or sorry, if soybeans follow the seasonal that typically happens between now and the end of life for, we're just looking at the March contract right here. You're looking for a rally from about 1150 up to 1295. So there's about a $1.50 rally in the soybeans seasonally this time of year over the last 5 years that we've seen. Most of that was maybe 2022. So if you take out 2022 in this idea, you still have a rally from 1144 up to about 1220. So, okay, an 80-cent rally in the beans. That could take us back in the soybeans between now and March back to the high end of that range that we've been in. So again, seasonality on soybeans coupled with, and the blue one here is, of course, this current year. Right.
How about the wheat? What's a carryover in wheat?
So wheat's carryover domestically isn't very tight. It was a lot tighter, for our two hard red winter wheats, sort of spring wheat and the hard red winter. There's two qualities of wheat in the U.S. There's generic wheat, and then there's the hard red winter wheats or hard wheat.
Your wheat chart?
Yeah, and Chicago wheat, which
look at that, that's really come out of the hole.
Really come out of the hole here this last week, and actually one of the biggest rallies we've seen in wheat since, got to go back to the summer months when we had what we refer to as weather markets, right? During the summer, in these big rallies in wheat, corn, beans, everything had these rallies during the summer when we were in that kind of drought-like condition, right? Fearful of crop loss or fearful of small yields. So the markets were rallying. We got timely rains which beat the market price back down, and a number of other things that affected wheat market, particularly that rising US dollar. But it's interesting that over the last couple weeks, we've been finding a bottom in the wheat market.
The wheat likes a weakening dollar.
Absolutely does. And if you were to overlay those charts, the dollar found its bottom here, on 1129,
same deal,
right alongside, right, the wheat finding its bottom there on 1128.29 as well. So the correlation, right, of that dollar and against the gold, against our row crops right now, it's just interesting to see how everything's kind of lining up here going into the end of this year. And
that's
what
really
has been
that's really going to be a problem for the Fed if some of these dollar counts come true, because it's going to make, at least nominally, everything more expensive.
Absolutely.
With a weak dollar. So if they're inflation fighters, a weak dollar is going to be a problem for them to fight inflation. It means that they have to raise rates to get the dollar to stabilize.
And speaking of those rates and that exact chart idea for the Fed, right? I have a chart up now, the 30-year note, right? So this is just, for those that aren't aware, the bond market is priced kind of with an inverted pricing scheme. So the higher the bond price goes, it's actually the lower U.S. interest rates are going. And the lower the bond price goes, the higher interest rates are going. So this sell-off you saw in bonds from April of 2020 all the way through
historic.
Now, right. This is a huge rally in price,
50% loss of principal.
Huge, right? And now we've seen it unwind a couple times, a couple rallies within this downtrend, right? All holding some pretty big key trend lines, two steps down, one step up, two steps down, one step up, another two steps down, one step up in this 120 to area of resistance now. Kind of going through a couple of our trend lines. My next big area to look for is up to 129 to 133. That's the really big level to kind of watch. I don't think we'll get all the way up to 149 just yet. But the idea here, folks, is that the dollar falling, coupled with a reversal higher in the bond market, and some of these other commodity charts and markets that are signaling maybe the same thing, are all saying similar things right now, which is, hey, we might have run our course in a very big trend that was based on, effectively the Fed having to raise rates and try to quell all of these commodity price rallies, all of these, right, inflationary pressures. If that's the tool they're using and they're starting to unwind that trade a little bit, well, right, the big question we all as traders have to ask ourselves, are we now entering into that next period of the Fed cycle, right, where we're coming out of a tightening, going into more easing? Are they going to be lowering interest rates? We've got, I think they said 6 different interest rate cuts priced in, now. now for over the foreseeable future, something like
Yeah.
that. So, right, the market is starting to anticipate and feel out the idea that, hey, maybe that rate rising environment is walk back a little bit. And if that's the case, right, the
Maybe
Fed.
that's I heard someone I was talking to yesterday said really, even though the Mag 7 has acted great, that this is a risk off rally in bonds.
Yeah, we
What do you
haven't
think of
seen.
that?
Well, I guess it's how you define risk, because I don't see much of risk off in the S&P right now or in the stock market.
Right, right.
Um, it's been a actually the rally in bonds. It's impressive how
Oh, it
little the
lit them
bonds
up.
had to rally
It
for the
lit them
stock
up.
market to rally.
Yeah. But why are
But
rates
that
going down? Because the economy is weakening.
Right. You're seeing the jobless, numbers
Yeah,
start to perk up. The unemployment claims are perking up, right? You see those reasonings that you think the fear
yeah,
of a slowing economy. That's a reason why crude oil prices are down a lot.
yeah.
And in fact, it's probably another kind of correlated idea to that idea
I mean,
is
they don't have to happen
feeding
at the
fat
same
cattle.
time. They don't have to
Right.
happen at the same time. In fact, I
No.
think traditional stock players, Daniel,
Mhm.
believe that the bond market rally bottoms and performs better in front of a bottom in the stock market. That the
I
stock
would
market doesn't bottom until bonds have been constructive for a while.
Yeah, I think there's some truth to that too, right? Markets anticipate things. They're not,
Yeah,
static. They're living,
yeah.
breathing creatures. And another little kind of outside market, live cattle here came
Oh
off of a
yeah,
wild run up and a huge top we made in September too. The
yeah,
dollar, right, had, this actually was rallying and face of the dollar didn't matter, but
yeah,
boy, did they unwind that trade
yeah. I know
massively
the
here over the
steak
last several
prices were
weeks.
coming down a little bit.
And we should probably anticipate that price of red meat dropping even further at the
Good.
grocery store, because this doesn't look like it's done yet. This looks like
Yeah.
it's now entrenching in
Well,
a
I
solid
remember when
downtrend.
these prices were ridiculous.
Hmm.
When you
It
had
wasn't
80,
so long ago.
$90 cattle.
Right. And if you look at the continuous chart of cattle real quick, you'll be able to see how 190 cattle was very
Yeah.
high. I mean, you go back,
Only a couple years ago.
the old highs here, people were 171 in October of 2014. We've been as low as though all the way down here. You can see down to the 80 and 90 and
Yeah.
100 level. Then you got your October, or excuse me, the
Oh
March
yeah.
or April of 2020 lows
COVID.
where
Yeah.
everything was
Yeah.
right at lows. And now we've had this massive run up since COVID. We're just unwinding a very big uptrend at this point in the cattle. And I
I
think that a lot of markets have to reset and unwind after these big moves. I mean, nothing goes in a straight line forever.
All right. I'm saying S&Ps are the same and it's imminent. Daniel, your stuff is
Hmm.
great. I like the kind of work that you do. Most people just click a button, for their trading. But when you're, talking about these kind of markets that we've talked about, um, I really think it's important that they have someone to collaborate with. So, if someone wants to set up a commodity account, how they get a hold of you.
Yeah, appreciate that. You can get in touch with me. My number there on the screen, and I can send it in the chat here too, 312-277-0110. Shoot me an email at dhussey@zaner.com. Find me on Facebook and social media at Dan SOTD on Facebook and at Daniel Hussey Jr. on Twitter. Yeah, we're happy to help everybody out. Doesn't matter if you have commodity exposure already or looking to get involved in markets. We help all service and size of accounts out, and glad to talk to you about what your needs and accomplishments in the market might want to be.
You have an account minimum size?
No, we don't. But trading futures and forex in general, $1,000 to $5,000 on the low end.
Yeah.
But we
For
don't have account
suitability.
minimums. Right,
Yeah.
for exactly. You can't do it with pocket change, right? But it's not, the barriers of entry are not as big as they maybe used to be, because there's now
Yeah.
minis and micro contracts in the futures, which I don't know, at tenth the size of a traditional big contract, actually, allow for traders,
Right.
smaller traders and day traders to trade efficiently and effectively.
When I was a broker, Daniel, before someone opened an account, I would say to them, you see that check? that you're holding in your hand, I want you to imagine striking a match and lighting it up. And if
Yeah,
that makes you nervous, it's not risk capital.
and that's true, right? These are leveraged futures we're talking
Yeah,
about.
yeah,
It's all risk capital, unless you're a true hedger, and then you're right. Then you're
yeah.
in risk.
That's
Then you're
different,
risk management, though. But even
right?
then, you're coming at the market from an element of risk management. So,
Yeah, yeah.
conversations.
So
Yeah,
I it saved me a lot of heartache as a broker
sure.
because
And one last thing I'll leave us
go
with
ahead.
here on the S&P 500. I know we've been talking about that chart for a while now.
Yeah.
Um, talked about that Millennial
Tell me
Black
we're
Monday
going
that I
to your
like to talk about.
triangle 4,400. Tell me we're going there.
I actually think we could. That's kind of the
All right.
that little bit of a flat I looked at
Yeah.
earlier in some other markets. I mean, we
Yeah.
could, in theory, still I think make it all the way down to 4,200. But I think
Oh,
the pullback
okay.
now. I mean, I don't think I wouldn't bet on us going there. The pullback in the near term, we start to get below 45, 50 here. These lows the
We
last
are.
few days, this little range,
Yeah.
right? We get below there. You'll unwind this down to 4,400-ish, somewhere in that area, right? That downward sloping trend line now is support, where these two trend lines basically meet, right? That apex of them,
Yeah.
like
I
the,
like
the
that.
rising trend line against the lows and the one against the highs. Like, okay,
Yeah.
test that area out. Make sure you want to stay up here and continue higher. And that's assuming we don't just continue higher in the near term, which I'm not
Yeah.
saying this market can't, but this has been a very,
So
very,
you could be
very
short
one-sided trend.
against, I'd say, the high of the week.
I would agree with
Stops over
that.
the
That
high of the week, right?
I agree, because if this market's rolling over, it should, really start to penetrate. We've got a few days down now, lower lows and lower highs. Now, yesterday was an outside day. It
Yeah.
was an outside day of the
And
prior
a lot
day,
of
and we
stuff.
we should continue lower. We really shouldn't even get above yesterday's high if we're going to
No, we
be
shouldn't.
continuing
A lot of
lower.
damage yesterday.
Right, right. And if that
All
gets
right. Well,
unwound, that's kind of bullish, but we'll see.
yeah. Yeah. Well, good instinct,
Yep,
you know, trade it small. To be there for the good times, you have to be there all the time. And
absolutely.
you are, Daniel. Good
Well,
to
thanks for
talk to you,
having me,
buddy.
Dale.
Yeah.
Always a pleasure.
Yeah.
Get my
Uh,
info here into the chat for everybody, and yeah, thanks for having me. Can't wait
yeah.
for the
And,
next one.
enjoy your holidays, Daniel. I'm a fan. I'm rooting for you.
Thanks, Dale. You too.
All right, everyone. So get a hold of Daniel for, if you want to set up a futures account and trade some of these grains. He knows the grains. All right. That's a wrap for me, everyone. Don't just count your bushels or your coins or your oil rigs or your MAGA 7 stocks. That's right. Count those, Sinatra. See everyone tomorrow for the NFP. It'll be no frickin' problem. Get ready. Adios. Oh, join the team in 14 minutes. And that's where you get the good stuff. See ya.
Hey traders, this is Blake Morrow with Forex Analytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.